Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Galaxy Surfactants, which is a decent chemical firm. And let's understand when should you invest into the company and what you should do if you are invested. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about Galaxy Surfactants, here's a small request that kindly support me on Patreon. And once you do that, it will help me grow the channel on YouTube and will help you also ask me questions on a daily basis. The membership goes up to $10 per month. And once you take that, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up on short term and long term market calls. For detailed market or company analysis, and if you're having a number of shares, you can directly email me and we can work things out with a fee. And you can also now pay for 10 months upfront and get a 1 year subscription to the Patreon membership. So you get 2 months extra if you pay for 10 months upfront. That's $100 in a go. Now about the company. Established in 1980, Galaxy Surfactants provides raw materials to most of the FMCG brands. The clients include Colgate, Henkel, Himalaya, Dabur, etc. Spread across 75 countries across the globe. Brilliant play on India consumption. This can also be played as an India consumption story. If you feel like most of the consumption stocks are expensive, you can get into something like Galaxy Surfactants, although it has also run up a lot. 65 patents given in the last 20 years to the company. The market cap of the company is around 4,000 to 4,500 crores. If you look at the financials, and these are December numbers, so sales went up. So sales went up by around 8% in the December quarter, but profit jumped by around 71%, and that could be primarily due to the need for more FMCG products as things have started to again look difficult, and things were difficult even in the winters with the cases and everything. Plus, there have been cost efficiency, there have been reduced cost. So basically most of the companies have reduced their costs, and that has helped the bottom line, and that's why the bottom line is shoring up. Decent dividend payout the company gives, a good return on equity of around 23%, operating profit margin of 15%. These are very decent numbers for a mid cap, you can say, chemical firm. If you look at the performance of the stock fell sharply last year in Feb March, so it didn't do that well at that point of time, but the numbers have been robust even after that, and the stock itself has recovered very smartly in the last 1 year or so, and is currently surging. So we are seeing that the stock is making higher tops, higher bottoms, and going up and surging ahead. Return ratios are extremely strong. Good sales and profit growth. I would believe that sales growth is also pretty good at 8% because of the lower demand that has crept in terms of, you can say, consumer stocks, so consumer, you can say, products. So 8% is not bad in terms of you can say sales growth, and profit growth has been absolutely exceptional. That is extreme, that is not that high and is reducing, so that's also a positive. High promoter and institutional holding, there's only 9% free float in the company, and that is a huge positive that most of the stocks are with the high net worth individuals or promoters, institutions, etc. That is extremely good. Now crude prices that has risen may spoil the party for most of the chemical companies. 63 $64 per barrel now. If you look back in time, even if you look 6 to 8 months back, the crude prices was hovering around 40 to $45 per barrel. So it has risen a lot, and that could be a dampener for the company. But I think growth will take sales higher. So growth, by growth I mean economic growth here in India, that could take sales even higher. So once things normalize, this stock could even perform even better as people will shop more and buy more products in which Galaxy put their, you can say, raw material. So why a buy on decline in my opinion? It is a market leader in its particular space. So it is perhaps the only company that is providing the chemicals to the FMCG sector, and that is why it is in a unique space altogether. Will outperform as economy recovers, and I'm sure over 2 3 years time frame economy should recover even more. So it is a good 3 to 5 year play. Yes, over the next 6 months we could see some pressure if the numbers doesn't support. So between 2000 to 2300 would be good levels to accumulate, but over 3 to 5 years this stock will also perform pretty well, like other mid and small cap companies are doing once economy gets back into shape. And I believe over the next 1 year things would be even better with more vaccination. It's a good quality mid cap firm, decent management, and in that regard it's a very decent company at the market cap that it is trading at. Yes, valuations are a bit stretched, and that is why I'm saying any dip of 10 to 15% would be a buying opportunity, and that could happen if the market becomes volatile and goes below 14,000. You could see these stocks also hovering around those buy levels as I have mentioned. If you look at the technicals of the stock, then as I mentioned, so 2000 is a strong support. So any dip towards 2100, 2050 would be a very good buying opportunity, and that is what you should look at. Although the stock could surge right now with most of the chemical stocks doing well, so wait patiently for a major decline from the top of 15% or so. Whenever the market declines, maybe next month, or whenever that sharp decline happens of 4 500 points on the Nifty and mid and small cap get trashed, that is when you really need to get into such stocks. Major up move is expected above 2650, I think. Then the levels of 3100, 3300 opens up. Otherwise, so these are for the traders. Otherwise, we could see 2100 on the stock. So a clear 10% decline could take place, and that could be a huge buying opportunity for most of the investors. Stock is an uptrend at the moment, and the short term support is around 2200, so look for that as well. Stock looks stretched technically. I believe that the move has been sudden and sharp over the last 3 to 4 months. I still believe that this could consolidate, but with other chemical stocks doing so well, there could be a situation this goes to 2500, 2550 or so. Wait patiently for a major decline to accumulate the stock. Don't rush to buy the stock, and try to have a long term time frame, so it may see some correction going forward. So buy on major declines could be the strategy, and keep track of numbers. Have a good 3 to 5 year time frame, at least a 3 year time frame. Only then get into the stock. Otherwise, avoid it. It can still give multifold returns from here if you have a good 5 6 8 years time frame. This could really perform, but over the next year or so, this could be volatile, as the market could be extremely volatile with the kind of pandemic cases we are seeing. So this is my video on Galaxy Surfactants. Please like and subscribe my channel and hit the bell icon so you can get my video straight away when I post it. And kindly support me on Patreon. Thanks a lot for watching.